Hello and welcome to another video. In this video, as the title mentioned, I'll cover the Uber stock. And my name is Pramod Kumar. I'm a CFA charter holder and FRM certified. I also run a blog https riseanalytics.ca. Basically, the reason for me to do this Uber stock is because there is a comment on my channel on one of the Nike fundamental review when I did it. So let me show it to you on that. So I just have copy paste this comment. So basically, there is a comment from one of the YouTuber, Rock Your Body 21. In that comment, the YouTuber appreciate the content of my review on the Nike fundamental review, and then when I thanks it and ask him which stock he like or she like, he the person recommend that okay, if you can cover the Uber on this my channel, right, Rise Analytics channel. So that's one of the reason I am doing this video on this stock analysis. Okay, so without any further delay, so let's get started. So here I am on the Yahoo Finance website, and this is a well-known famous website to get the public content. So here I can see right now the market is closed, but the stock is at $33.40, and basically this is the ticker name, the Uber, and for this year the range is $31.71 to 47, so it's within that range. But one thing to note here is the earning per share is negative. Okay, so let's go to see the financials. So when I went to see the financials of this income statement, this is a young company, and it's not generating profit. Okay, but although this is the global presence, and I'll share that with you. So basically, if you notice from the income statement from 2016 and to 2019, the company continuously losing money, right, and losing not only just losing but keep losing more. So if you see here, it's only 370 to 4 billion, and then comes to under 1 billion of profit, and then 8.5. So it's very volatile if you notice in terms of earning and loss as well, right? And then the TTM is 10.43 billion, right? So if you don't know what is this and how to read, I have a video on the income statement. I appreciate you go there and watch that. It's on available on my channel. Okay, so let's go from so that's from the net income, which is very significantly lower, right? 10.43 billion, and even in year end of 2019, it was 8.5 billion. Okay, but the gross profit is a good point here is the gross profit is keep increasing, right? 1.6 to 7.2 billion, right? So it's keep increasing and increasing a lot, but seems like they have a very heavy in terms of the SG&A, right? If you notice, it keeps very significantly increasing, and that's one of the reason the operating income is lower and their net income is lower. Okay, so let me go take you to directly to their 10K without further delay, and then from there we'll show. So let's say what first of all try to understand this business, and then I will come back to the financial statement as well. Okay, so Uber, let's say what they say. So this is their 2019 annual K report. The company pitches that it is in 69 countries. It has 65 billion gross booking, and then 7 billion trips, right? So that's the very global, and it's refer itself to as a global tech company. Okay, so that's one thing. So this is now their 10K, mentioning the symbol. Okay, now if we come to the segment, so which more segments they are. So in the business overview section. So they're in a couple of different segments, right? The ATG they mention here is Advanced Technology Group. So basically they are in rides, eat, frights, and some ATG group as well. Okay, so here they mention they are having rides, eat, and okay, we know there's Uber rides and other, right? Okay, now let me tell you. Okay, now let's see what's going on here, right? So when I find that, so the competitive environment, right? So the company is basically global basis is a highly fragmented market, and they're saying is very competitive environment in each segment of the business. It's not only one segment where they are number one, but it's each competitive environment. So for example, for rides, right? Let's take the rides business segment, right? So they have a very global competition with Lyft, Ola, Didi, and so on. In eating section where they delivery the takeaway foods, you see these names, right? Grubhub, DoorDash, and the big giant like also Amazon. So Amazon, in at least in Canada, I know they are not doing any delivery, but maybe in the US market, I'm not sure if so. Seems like they are doing it, but they mentioned the name there. So something is going on, okay? So this is, and then there's a Fright. Fright, we know the big names. They are DHL and so many other logistic companies they have mentioned. And then there are some scooter, bike share space, seems like, and then other technology group. Seems like they're trying to compete, seeing their computer as the Tesla and cruise automation. So seems like they are doing some automation as well and competitions, okay? So that's the problem. So what happened? Okay, now I want to share some this information to you. So let's say what's their risk on this business, right? So any business to be successful, right? There are a couple of factors there, right, which makes the business strong. If it's especially on this personal mobility and the meal delivery, if it's a highly competitive business, but the problem here is these are the things, right? Well established and lower cost alternative. So in this each segment, what Uber is saying, they already have the the highly established and lower cost alternatives are available to the consumers, right? And not only is right now, but this is available for decades. There is a low barrier to entry, which is a very bad sign. Low switching cost. So this means there is no loyalty, right? Something like a Coke, Pepsi example. But they have a big brand, right? But for ride sharing, it's a little bit different, right? And they don't have that much stickiness in terms of their brand. If as a consumer, if honestly, if I get us for the same distance, if we'll get Lyft, we'll choose Lyft because they're new to the market, they're giving the heavy discount. So think from that perspective. So which is adversely impacting their business and is clearly shows under their risk. And another, so what they're doing, right? So the main problem, I think, the meat of this sections is highlighted here. So to remain competitive, they're saying in certain market, right, we have in the past lowered and currently lowering and may continue to lower fares or services. So this means to attract customers, in short, they are giving huge discount, and that's the only seems like the way they are getting, right? You see, and also and so this is on the consumer side. But since now they so on the driver side, they are they're giving the incentives in order to keep the drivers. If they don't have the drivers, then they won't get the revenue. But if they're taking the huge cut, so that's also impacting their bottom line. And they're saying it may continually affect the financial performance. Okay, so that's very bad. And one thing it surprises me that it's not only its losses since inception in the US and other major markets. So any other major market, they have the same problem. We expect, and they're also expecting this not only now but in continue foreseeing foreseeable future. You see, read this line, right? We expect our operating expenses to increase significantly in the foreseeable future and may not achieve profitable. So companies claiming that they're not able to achieve the profits in any time near soon. So why we need to touch such a company or stock? Maybe just based on speculation, but end of the day, if the fundamental is not strong, if the company is not able to generate any profit in near seen future, it's not even saying near, it's saying just any foresee future. So maybe 2 years, 3 years, 4 years, right? And they have continued loss. So they are saying we have a significant loss, for example, 4.1 billion, 3 billion, 8.6 billion in on the past 3 years, right? So that's a huge in terms of, and then we had an accumulated deficit of 16.4 billion. So they have a lot of problems going on with their company. Okay, now in this one, they have also shown the performance graph of 2019. And in 2019, they compared with the index, right? With the, this is, you see the high one, the proper grade one is the Uber stock. And then we have a broad index of S&P 500 and then specific S&P 500 IT index. And if you are not sure what these terms means, I suggest you watch my basics of stock market video. That's a 45 minutes video, but it's give the good explanation of all ETF, mutual funds and all. Okay, so you see, if in last year, if you invested $100 in Uber or in these, so you'll have left only less than $80, right? So the company did worst in last year, but at the same time, the broad index did very well. Okay, so that's what trying to reflect here. Okay, so now keeping in that mind, so now let's say again their income statement, right? So income, this is in million. So these are all in million, right? So they started with the revenue is doing good, COGS is doing good, but they have a significant income loss, which we have already seen. So I don't want to repeat that because we already seen this in Yahoo, but I just want to show here, which is very nicely reflected here in their 10K, that in 2015, suppose if you have invested in Uber, you on the per share basis, you are losing $6.57, and after 4 or 5 years you will be losing even further, right? Few cents further. So basically no time to value stock, so which is a pretty bad investment, because if the money is not growing and it's sitting there, so it looks very bad. It's better if you just put like that in any index or maybe liquid assets, at least it's grow a little bit. Same thing on the balance sheet. If you notice, their liabilities is keep growing from 4 to 9 to 11 and 16, right? It goes up in 18 but come down. And assets, okay, that's not a problem. Okay, and paid in, what is this? This is accumulated deficit. So they're, oh wow, look at their how much deficit they have accumulated. 7 billion and in 14 billion. Seems like total equity, you see, it's because the debt is high and it was negative, but suddenly in 2019 it became positive. So maybe they have issued or diluted the equity a lot, which even reflected in total assets. So let's see if that's the case. So probably around 14, maybe $8 billion, I think they might have raised. So let's find out, right, if this is correct. So okay, so I'm on their cash flow statement. So let's say see the cash flow. And operating for sure, it's they're doing quite a, under depreciation is not that much because maybe they don't have that much FS assets because they're using the asset light company, right? Okay, okay, it's pretty negative. Wow, yeah, that's expected, right? So this is negative, and investing, just leave it. Oh yeah, you see here. So our doubt was correct, right? So proceed from the issuance of the common stock upon the initial. So they did issue the around $8 billion of the stocks, right? So they dilute. So if their losses keep going, I assume they will keep doing that, okay, and which is not very good. So this means uh, even further reducing our share in the company, right? Because if they issue more shares, this means our per share of the company is reduced. If whoever did the investment on this, luckily I am not have any investment in Uber, and I don't think so I will do based on this. So pretty much that's I think no point is going forward with this stock, although the company is new, but it's keep not able to generate the positive earning per share. Although now coming back to my same point, even if one thing surprised me, that if it doesn't have that much global presence, right, I can understand. But even if somebody is in 69 countries or 7 billion trip, how many more trip they needed? Because the problem is the business is very competitive, and they are not market leader in any of their segment business, and the competition is high, so they get squeezed from the drivers, and to attract their customer as well. And if somebody might argue, okay, but this is very initial stage, and maybe that's what's the sharing economy, right? I have a doubt in that one, especially on the car sectors. My personal opinion is how I envision the future based on robots, or that drones delivering, or autonomous vehicle, where if we are seeing that future like that, where we'll see Uber, right, or these kind of a ride sharing companies exist. So given that in mind, I'll say no to this, but that's my personal opinion. Everybody has their own opinion, so I'll say no. And that's it from my this video perspective. And if you please like my video, or if you want me to cover any other stocks, please put in the comments. New to the channel, subscribe and keep like it. It's keep me motivated. I like making these videos and talking to you and sharing the knowledge. Okay, thanks for now, and see you soon in a new stock. Bye for now.